Monday.com is one of the stocks that's getting dragged down by the broader software stock sell-off. But this sell-off is not unwarranted. Monday.com's management team withdrew its longer-term forecast for revenue. The company's spending more to retain and attract new customers, and it's under litigation from investors that are saying that the management team misled them about their revenue growth potential amid these headwinds, all of which it's weighing on the company, and the share price is down over 60%, trading at its 52-week low or near its 52-week low. Investors want to know if this is a generational buying opportunity or a falling knife to avoid. I'll answer that question here.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
You can see the awful price action here for Monday.com year to date in 2026, collapsing in early to mid-February as the software stock sell-off took hold, and then moving further down still, trading at $58.82 after it fell another 6% today. Monday.com had been one of the darlings in the software industry due to its phenomenal revenue growth rates and improving cash flow from operations. You can see in 2023, it boosted revenue by 41% and then boosted revenue by another 33% in 2024. 2025, the revenue growth rate continued decelerating, although still growing positively at 27%. And then the analysts on Wall Street are forecasting declines here in its revenue growth rate to continue. The estimate suggests that Monday.com's revenue growth rate will fall below 20% in 2026 and continue moving downward. This revenue growth rate deceleration has been meaningful and could be partly to blame for the company's declining stock price. The management team had provided a longer-term revenue growth outlook, but withdrew that guidance in the most recent earnings conference call because of all the uncertainty surrounding artificial intelligence. The company is spending more to acquire customers and retain customers, and that's likely going to weigh on their profitability in the near term. Those revenue growth rates I highlighted earlier would have been less impressive had the company not been also improving their cash flow dramatically. Their cash flow from operations to sales improved from negative 47% in 2019 all the way up to a peak of 32% in 2024 before declining to 27% in the most recent period we have data. Still, this figure at 27% is an excellent figure if the company can maintain. However, the fear from Wall Street is that the company's margins, along with their cash flow, will continue declining as they have to spend more and more to attract and retain customers. The fears of the rising effectiveness of artificial intelligence has the company's investors worrying that enterprises will use artificial intelligence services to replace what they're getting from Monday.com. So far, we haven't seen that yet. We haven't seen a major exodus of the company's customers, but we are seeing evidence that it's finding it more challenging to generate revenue growth. It's finding it more challenging to sign new customers, and it's having to work harder, hire more salespeople, offer more incentives and promotions in order to retain customers. These are all troubling signs that have hurt the company's valuation. All that being said, the company's valuation reflects a lot of these headwinds. You've not been able to buy Monday.com stock anywhere near as cheaply as you can buy the stock today. On a forward price to earnings basis, it's trading at 14.5. To begin 2025, it was trading at 70. On a forward price to operating cash flow, it's trading at 10. To begin 2025, this metric was at 35. And so the valuation has been slashed by 2/3 to 3/4, depending on the metric you consider. And so a lot of those fears about what could happen to the company in the future are likely already incorporated in today's valuation. I don't know if the fears from artificial intelligence will continue rising from this point. It seems like every week or every 2 weeks, there's an announcement from Anthropic or OpenAI or some other large language model or AI company about a new capability that drives down the valuations of software stocks. And I don't know if that will end because investors are hypersensitive to developments in this category. Any even remotely threatening update from any AI company seems to send software stocks crashing down. I think a lot of those risks are overblown, but we're not going to know that for sure until many years in the future. What Monday.com can continue doing is delivering solid results, executing on its business plan, and serving its customers well. Only by reporting solid quarterly financial results could they remove the fears from investors as investors continues to see sales climbing and profits improving. Without those kinds of solid quarterly financial results, investors will be more prone to pay attention to those latest developments from AI companies that threaten to substitute what Monday.com offers. Similarly, when I calculate the valuation based on my discounted cash flow model, Monday.com stock looks really undervalued. But this is similar with a lot of software stocks. There's so many software stocks that look ridiculously undervalued right now. It's remarkable. However, the software industry is at the greatest riskiness of any industry right now, arguably the greatest risk of any industry right now, and certainly the greatest moment of risk for the industry overall in its history. Monday.com is trading near its 52-week low at $59, and the intrinsic value per share I calculated is 138. So, if you ask me, do I think this is a buying opportunity? I would say yes, it does look like a buying opportunity, but I would say any software stock right now should only be considered for investors that have a high risk tolerance. The software industry will go through continued headwinds and continued volatility. And so, if you're a risk averse investor, I would recommend avoiding the software industry overall. Hey, thanks for watching. I truly respect every viewer who takes the time to seek qualified financial analysis. Unfortunately, there are a lot of unqualified voices online giving unsubstantiated stock advice. My goal is to provide research that's grounded in data and professional training, not just what's popular. For those new here, I hold a master's degree in financial economics. I'm a CFA charter holder, an author, an adjunct professor of finance and economics. I've spent nearly a decade researching stocks professionally, and I'm here to help you make informed investing decisions. If you found value in this analysis, make sure to subscribe and consider joining the channel as a member for early access and in depth members only content.